Good morning, good afternoon, and good evening, everyone. Long time no speak. So I did put a message into the community tab. I said 50 likes and I will post another video, but I got bored of waiting for people. So I'm going to bless you with a breakdown of USDCAD. So I haven't actually been trading that much recently. Obviously, we have the tensions between Russia and Ukraine, and we have a potential World War III on our hands. So my view on the market is I'd rather not get involved, and I'd rather err on the side of caution and preserve my capital. Now, that being said, before Russia was invading Ukraine, I did take a couple trades. So I'm going to break down one of them here. We've got USDCAD. I took a long on USDCAD. Now, where we were was here. Okay, so going through the higher time frame analysis on this pair, what I was expecting was a push to the upside. Now, why was I expecting a push to the upside? So first of all, we had this obvious liquidity sort of trap retail trend. We've got 1, 2, 3 taps. There's going to be a lot of resting liquidity above this high, also above this high where people have sold short. So I ideally wanted this or this as a target to hit. Now, from the downside, we had wiped liquidity. So you can see retail trend, obvious spike down, liquidity wipe. Then we get a nice movement up, engineering some liquidity up here. Then we also have another liquidity wipe to the downside, still leaving this upside liquidity intact. Now, from this liquidity wipe, we then create this sort of inefficient move upwards. We create some imbalance. Now, my thought was, because we'd moved quite quickly on this, I wanted to see a fairly shallow retracement to fill a little bit of that price inefficiency before then moving up to take this high. That was my thought, and that's what I was going to base a trade on. Now, with this sort of idea and the way that I trade intraday, you don't need to be right for a couple hundred pips. Okay, if you want to take, I don't know, 20 to 50 pips out the market, you can do it using this sort of knowledge, right? So inefficient price move, looking at to take this liquidity to the upside. We'd already wiped the liquidity to the downside, so I was looking for fairly shallow retracement. Now, I drew out a zone. It was on the 4-hour. Yeah, it's this zone on the 4-hour. We had a candle closure, so that sort of created this imbalance here. And that was the zone I wanted price to come back down at least to the 50% of that, to then move off. So if I move price forward a little bit, I've got my daily separators. So this is the week start. That little red line, that's Sunday. We've now got Monday. Wasn't seeing a whole lot on Monday. At some point, I am going to talk about a weekly cycle. I've got that planned for a YouTube video, weekly cycle and daily cycle, which will explain more of this sort of concept. So on the Monday, we created some liquidity. We created some trend liquidity in here. And I was effectively looking for a bit of a spike down and wipe some of that liquidity. We actually wiped out the previous day's low. So the Monday low. And we completely filled the imbalance on the 1 hour, see, to the absolute T. So as far as entries go, if I zoom down a little bit more into the lower time frames, let me get rid of some of these things on the chart. There we are. So we had this liquidity wipe. We filled that 1 hour imbalance to the absolute T. And effectively, I was looking for some form of entry to the upside. Now, I could have taken an entry in New York, but I did miss that. It was quite an obvious sort of entry where you get that shift upwards. You know, that's a change in the state of delivery. We've got downward moving price on the way down. We are engineering liquidity. Then we get big shift up. We create some imbalance, inefficient price action within here. We return to that. We've broken structure as well. So you could have taken an entry within here on an order block like so. nice rejection from there. But I didn't actually take one from here. Price sort of developed a little bit further, and I believe it will have been on like the 1 or something minute time frame. There we are, on the 1 minute time frame. So we got this push up, and I effectively just seen that we had a small wipe of some liquidity here, push down before then an instant push straight back up. And this sort of volatility in price action, when it pushes down, you can see this clear movement upwards. It's taken money out of the market here, and because of that, we were going to get a shift up. Now, my entry was on this break here, so we pushed up, and I just put a pending on that. Target was obviously that higher time frame target that I mentioned. It was that high there, and I just sort of let the trade run out. Now, this one was half risk. Reason being is because I missed my ideal trading time, which would have been the New York, either London or New York session. And the New York session was here. It created that key reversal. So I could have got in there, but I missed that. So I took a re-entry following my bias, and I took it on half risk. So that ended up being a 125.6, which was around about 2 and a bit percent. Not the hugest amount, but it is a nice clean trade breakdown where you can see the key concepts being shown. So I'm going to leave you with this. At some point, I'm going to cover the daily cycle and the weekly cycle, so stay tuned for that. But I'm going to leave you with this. Study it if you want, but I hope you guys enjoyed somewhat, and I will catch you in the next video.